Good morning, students. How are you all? Hope you all are fine at home. Okay, I am also fine, students. So we have completed the 7th lesson, cash book, isn't it? Cash book we have studied. In this cash book we have learned the 3-column cash book, isn't it? In the 3-column we have cash column, then discount column, discount and bank column. Both the sides we have these 3 columns, isn't it? Cash, discount and bank. This bank reconciliation statement is related to this cash book because the business, now we should know first what is that cash book and bank passbook. Okay. So every business house, they will prepare their book as the cash book, and when they open the account with the bank, usually the business will open separate bank account that is current account. Ordinary people will be preparing the savings bank account and fixed deposit bank account also we prepare, but this one, the business people usually they prepare one bank account in the bank that is called current account. But here they have one special facility that the other holders they do not have. Okay, what is that special facility that they have is the bank overdraft facility. Okay, overdraft facility, the business people, the one who opens this current account, they have. What is that special facility? That overdraft facility means we can withdraw money more than the amount that is available in the bank account. Okay, but in ordinary bank account we can withdraw amount only what we have in our bank account, isn't it? But this current account people, for example the business people can withdraw money that is not available in the bank. Okay, so they can withdraw money over the amount that they have in their bank account. That is called overdraft. They can withdraw money over the credit balance that is available in their account. Okay, so for that they may charge some amount. Okay, that overdraft charges, bank overdraft charges. Okay, because like interest. Okay, interest will be charged for that overdrawn amount. Okay, now you know about this current account. Now we prepare the bank account in the bank, isn't it? So that the bank will give one book that is called bank passbook. Bank passbook. Now after preparing the cash book, we need to check the balance in the cash column. Cash column, what we can do, how can we check whether that cash available in our hand and that cash balance in the cash book, we can check, we can count and check. If it is 1000 in the book, cash book, and if we count in the our counter, if we check the amount, then it will be tallying. Okay, then our calculation is correct, we can conclude. Okay, but how can we check the bank passbook and the bank column of the cash book? Okay, the bank column of the cash book will be checked with the bank passbook. Okay, so here some differences will be there. The differences will be there in the bank passbook because when we deposit, why that differences occur, that we will learn. Okay, when we deposit money in the bank, where we enter in the cash book, we will enter in the debit side, isn't it? But when we deposit money in the bank, where the bankers will enter. First we should know the bank passbook. Okay, how they will enter in the bank passbook. Particulars column, date column will be there. Okay, you can refer in the passbook. If you have at home, you can refer. Okay, date, then particulars. Here debit credit, isn't it? They will not write like this debit credit. I am writing just for your understanding. Why they here what they will write as the debit means the withdrawals. Withdrawal. If we withdraw amount from the bank, they will debit. The bank people will debit. This is bank pass. Okay. And in the cash book where we will enter. When we deposit, okay, here bank column, cash column, here also cash column, bank column, discount is there, okay, just imagine, here when we deposit, we will write on the debit card, debit side, okay, on the debit side only we will post it to bank account. Bank account debtor to cash. We will write, okay, 10,000 or 1,000 it is, okay. Here we will, on the debit side we are entering. So, but where they will post, when we deposit money in the bank will credit, okay, that cash, or if we pay cash, they will write us, by cash, okay, they will credit that amount. Here they will write the deposit, okay, what we deposit. Then here they will balance. Here the bank passbook will be balanced after each and every transaction. Okay, when we deposit rupees 1,000, here the balance will be written as rupees 1,000. But the cash book will not be balanced every day. Okay, the cash book will be balanced at the end of each period. Either it may be weekly or monthly. Okay, so after entering all the transactions, we will enter and balance it. Usually the cash book will be balanced at the end of each month, isn't it? But the bank passbook will be balanced after each and every transaction. Okay, so by cash we are crediting. Why this difference? Why the cash book, the business people, you can write here the business people only prepare the cash book, isn't it? But here the bank people, the banker, okay, they maintain the bank passbook. Okay, that is called the statement of customers. That is customer statement. Okay, customer's bank account will be given in as a statement that we can call as bank passbook. So when the business people will be debiting the deposit into the bank, but at the same time the bank people they credit the deposit. Why? That I will explain. Okay, here from our viewpoint, business point of view, that bank is the receiver, that is why we debit, isn't it? We debit the bank, that's why we debit. Why here they are crediting that one? Because it is considered as the depositor, that means the business as the creditor. Okay, because from their point of view, what we can say, they are receiving that amount, isn't it? And that should be given to the customer in future. So they consider them as the creditor. So that is why they credit. Okay, because who is the giver? The customer, isn't it? They are receiving, but at the same time they can write no cash account debtor to this business people. Okay, that is why they are crediting in the past. Now we have understood. You may not get that why we debit and why the bank is crediting the deposit. Here from the point of view of bank, they receive, but who is giving? The customer, isn't it? This business. So that is why they credit our account. Okay, so they will write there as deposit. When we withdraw money from the bank, how we will write? Cash account debtor to bank, isn't it? Here both it will be contra entry, it will be entered both the side. And when we withdraw amount, how we will write? Deposit we have seen. Now next we will see the withdrawal. Okay, withdrawal time, cash account debtor to bank. So here we will write by cash. In the bank column we will write 500. For example, 500. Okay, here we are crediting the withdrawal. But when we withdraw amount from the bank will debit, okay, to cash. Okay, here 500. Then what is the balance in our account? 500. But we never balance this cash book balance. Okay, but we will balance it only at the end of each month. But that passbook they will balance after each and every transaction. Okay, now again some check will be issued, isn't it? Once we issue check for our suppliers, we are issuing check to our suppliers. What we will write? Where we will write this one? The supplier account debtor to bank. The bank only will pay, isn't it? So by, for example, A and Co. That is our supplier name. By A and Co. The bank is going to pay, isn't it? So 300, for example. We will credit the bank. But when they will enter, when we issue that check on the same date, we will enter in the cash book, but the bank will never enter the same day. The check will be given to whom? To our supplier, isn't it? The supplier may take it, and after, whenever he needs money, he will deposit that check in his bank. Okay, so when it goes to our bank for collection, that day only they are going to enter that one. Okay, so to whom they are paying? A and Co. 300. But the date will be different. Okay, not the same. When we deposit that, when we issue that check, it will be entered immediately, but the date will be later. Okay, later in future only the check will go for collection. That when they make the payment, okay, when they make the payment only they will enter that one in the bank. So they will balance it 200. Okay. Then in the same way, when we deposit check into bank, when we deposit, we will enter. Okay. Deposit check. Bank account debtor to cash account. When we receive check, and we will keep it with the business. So when we receive check, what we are writing? Cash account debtor to that customer's name, isn't it? So now to cancel that cash account, we are crediting that one. So the bank is receiving the check and cash is going out. Okay, not cash actually, that paper, that check is going out. So we will write deposit. Okay, 2000 for example. We are entering. But when we deposit that check in the bank, the same day they will not enter in the bank passbook. What is happening there? The check will be going for collection at the other bank. Okay, so it will go for, and they will realize that amount. When they realize that amount only, they will enter. Okay, by that check name they will write. Okay, check number they will write, and it will be entered there in the deposit. Here 2000. So when they realize the amount only, they will enter. Okay, not on the same date. When we deposit the check inside the bank, they never enter, but the check will go to that concerned bank and it will go for collection. Once they receive the amount, or once they realize the amount only, they will enter this one. So now the balance is 2200. Okay, so because of this time difference, one day we are depositing, but the other day, after 2 to 3 days or 5 days, maybe 10 days, they will receive the amount. Sometimes what will happen, the check may be dishonored. We say in ordinary the check bounced, we say, isn't it? So if the check is dishonored and again they will, so they have sent for collection, it has not come, then what they will do? They will not enter this 2000 as credited there in the deposit. Okay, but here what we have done already in the bank column, we have debited. So because of these reasons, many that differences will be there between the balance in the cash book and balance in the passbook. So now here we have not entered the other things also. Some that other things means sometimes the bank will receive many amount as per the standing instructions of the customer. For example, the business will give some instructions to the banker. Nowadays they do some services. For that they will charge some amount as service charges. Okay, the bank charges. Okay, so that sometimes they may make some payments also. Some payments means the insurance premium or electricity bill, phone bill, all these the bank may directly pay for the on behalf of the customer. Okay, so there these entries will be made only in the bank passbook. Okay, for example, by interest received. Interest received may be for any that amount directly they receive, or for our credit balance once in 6 months they will that credit interest on the balance available. Okay, so they may be for 100 rupees interest received. Okay, this the business people may not know. In the cash book it is not entered. Okay, as a receipt. You see that credit will be, this credit will be in the debit side. Okay, so we have not entered the, not in the balance, credit side. Then 2003. Okay, so that one is not entered. In the same way, the payments that the bank make. Okay, for example, the electricity bill. Okay, to electricity bill. Then the detail will be there. Okay, the bill number, date, everything will be there. So when that electricity bill will not be credited here. Okay, electricity charges, it is not credited here, but it is already credited in the bank. So because of all these reasons, there are differences between the balance in the cash book and balance in the passbook. Okay, so here in this deleted portion we are not asked to do any problems. Okay, even then I have explained you why the differences occur. Okay, so only then when you go for the college you can do the problems easily. Okay, why the differences occur. In the earlier class I have explained everything, how to do the problems also. Okay, you can refer to old classes also. Okay students, so just read this bank reconciliation statement lesson, and only the 2 question answers available. You learn that one. Okay students, thank you very much.